So Bernstein sees some weakness in Tesla, Kevin, but this name just had pretty strong delivery figures we got yesterday. It's like never enough for some of these bears, is it?
They were able to meet the street's expectations when it comes to deliveries, and they did a lot better than some of their competitors when you're looking at the expectations. But you are right. Bernstein is still a little bit cautious when it comes to this name here moving forward. And they actually did put a $150 price target on Tesla shares, which would be around a 38% drop from the current price level here. Now, they have several different concerns to be focusing on. First and foremost, obviously focusing on the margins. That has been a little bit of a concern for a lot of investors over the last year. As Tesla continues to cut prices, their margins are also going to contract. And they also believe that Tesla will actually have disappointing volumes in 2024 as well. They're also looking at the situation of valuations. It is trading at around 100 times earnings per share, as well as around 200 times its 12-month free cash flow. So they're just citing a couple of different areas where they believe that the market itself, the investors in Tesla, are going to start questioning the growth opportunities in 2024, what's going to happen with margins, and if the valuations really do match where the current price is right now. And that's where they're kind of headed going into 2024 and their thoughts about the company at this point.
I don't understand what these institutional investors want. Do you really think that the PE is going to come to a desirable price for you, like a 30 PE? Do you really think that's going to happen when Tesla Energy is growing at 50% a year, when the next gen vehicle is literally around the corner, when Cybertruck will contribute an additional $5 billion in profit to Tesla's bottom line when they reach 500,000 units a year? Those three staples to me solidify Tesla's earnings growth over the next couple of years. And that's earnings growth independent of Optimus or FSD taking Tesla to new heights. So no, I don't think it's possible Tesla could get a 30 PE right now. There's too many people who would be willing to pay the price. That's what's driving the stock to these high PEs that companies or institutions like Bernstein do not like.
I have to wonder, have Elon Musk and team, kind of earn their trust, if you will. There's been periods of volatility in Tesla in the past. I mean, even, as we kind of closed out 2022, the stock was down near 100. It turned around in short order. It really does seem that investors for this company are quite loyal. And then you got your bears, your Gordon Johnsons of the world that are almost like the Grinch when it comes to this company. It just seems so polarizing. So despite what actually happens with the numbers, it seems like no one's opinion ever changes.
Yeah, definitely, Alex. I mean, you and I are right there on the same page. I mean, the company's trying to operate in a very interesting environment because this is a secular story that is taking place, and we are seeing it develop right before our eyes. So it's really hard to try to attach a valuation to it. If you try to compare it to a car company, if you try to compare it to a technology company, what have you. And that's really been the back and forth going on, not only just for last year, but the last couple of years. I think also just listening to the vision of Elon Musk and the Tesla team, what they want to really do moving forward. I mean, they are really gung-ho when it comes to full self-driving. They do believe that that's going to be a catalyst for them. That's going to be able to provide some long-lasting returns in the future, as well as, some of the AI innovations that they have. And I think that's kind of the disconnect that the street is seeing right now. And as we kind of talk about a lot here, I mean, they have a bunch of different areas within their business, especially in energy storage, the supercharging networks. And that's probably one of the most undervalued areas to focus on with Tesla, and one of the fastest ones. And so I'm just going to be very curious to hear if Elon's going to start hinting towards a little bit of a transition, focusing more on the utility network in itself rather than just the car sales, which we know can ebb and flow with economic cycles.
Well, I think Elon's already been doing that for years. I mean, every time on the earnings call, he gets frustrated that all investors want to talk about is cars. He's been obsessed with AI. He's been obsessed with energy. He's been obsessed with thinking from first principles about how can we make this more affordable. And I think people are starting to come around on these new ideas. And as we've seen with Cybertruck, that's really been what's converted people. You've got Jason Camissa changing his mind. You've got Adam Jonas starting to see the AI side of the business. We even saw Scotty Kilmer on my channel this morning saying some unbelievable things about Tesla, actually positive for once. So look, as we get the Model 2, as we get this affordable vehicle that still has a lot of the great qualities of the other higher priced Tesla models, people are going to come to terms with the fact that Tesla is now the standalone best product you can get to take out onto the roads. It's going to be the iPhone doesn't really have anything that compares with it. So let's talk about the Model 2.
Well, that's ultimately the goal for Tesla, right? That was something that they outlined at their investor day last March, the path to mega scale, right? 2024 from a volume perspective for Tesla, we're at 2 million units. That's below consensus of 2.2 million. So it is some growth. It's low double-digit growth versus 2023, but it is below, the long-term growth curve Tesla has laid out. And that's really because there's not much in the way of new incremental product for Tesla in 2024. Yes, there's Cybertruck, but we think that's niche. It's really Model 3 and Y, which are somewhat dated models. And so really the story for Tesla on volume growth going forward is going to be Model 2. Whenever that is released, we have that as, sometime in 2025, where they really go down to that lower price point. But there's a ways to go to get to that lower price point. They have to drive out a lot of cost to get there.
Well, look, Elon said on the interview with Sandy Munro at the Cybertruck delivery event that the production line for the Model 2 is unlike anything we've ever seen before. And maybe Tesla is rethinking all of this. Maybe it's not about driving the cost down of the Model 2. Maybe it's about 5xing the utility of the vehicle through full self-driving. If you can make a vehicle 5 times more valuable because it doesn't require a driver anymore, is that not the same as driving the cost down? I'm also tired of hearing that Cybertruck is a niche product for Tesla that doesn't fit the mission. It absolutely fits the mission, and we're not going to see it be a niche product at all, but rather make up 25% of Tesla's sales potentially. They've got a production line at Austin, 250,000 units. Production line at Mexico, 250,000 units. Next year, if this guy predicts 2 million Teslas sold, then eventually Tesla gets to 500,000 units on Cybertruck. Between those two production lines, that's not a niche product. That's a significant portion of Tesla's deliveries, and they just happen to be in the highest margin market.
Look, I think Tesla has been clear that there are a number of production challenges along the way that need to be met with Cybertruck. And so that's why, to us, yes, Cybertruck is a different model for them, and it does help give some model diversification, which they've needed. That being said, we would set our expectations accordingly on Cybertruck. We're assuming that you're not going to get more than 20,000 units in 2024 because it is such a slow ramp. There are likely some questions as well on demand. We think that it will draw on some consumers who want more of a lifestyle type vehicle, but we don't see Cybertruck really penetrating that core large pickup market, which is used for work purposes and commercial purposes.
That is absolutely crazy to me. Just today, the Ford F-150 Lightning's price was raised by $10,000. Ford and other OEMs are showing absolutely no signs of making their EV trucks at affordable costs. All they are doing is pulling back on the EV transition, but newsflash, the world is transitioning to electric vehicles, and Tesla is the only one who is showing any hope of making an affordable electric truck at a profit. So a few years from now, when your business is looking to buy you a work truck and they're looking to look good in front of, the community and go electric, they are going to buy the most affordable, most high quality option, and I guarantee you that is going to be the Cybertruck. These institutions are wrong that Cybertruck will not be a work truck. Just takes one electrician in every town to convert the entire fleet of tradesmen. Watch.
And we did see cutting back on EV production from Ford, for example, said they were cutting the F-150 Lightning production in half. That probably benefited Tesla, no doubt. We had the Cybertruck launch for Tesla. This is one that you've always been a fan of. Where do you think this is headed, and what did you think of 2023?
I think they made the right poker move. Cut price for units. And that paid off, I think, massively, especially the first half of the year. Now, of course, then you got to the invisible line. Like, you can't continue to cut prices, worry about margins. That's been a bit of an overhang in the stock, we'll say, of late. But units going to be close to 2.1 million. And like you talked about, Nicole, they're doubling down on EVs. Others are starting to pull back. I think there's just a huge opportunity for them. You could Cybertruck, you could, I believe, is going to be a sub 30K vehicle, just to further flex those muscles, on its path to $1 trillion market. And the bull market started. I mean, we see tech up 25% in 2024. I think it'll be broader. Magnificent Seven will lead it, but broad in terms of mid cap. This is the big, we call it 1995 moment. It's the biggest tech transformation since the start of the internet in 1995. And that's why the bears, they're sleeping deep in those caves in hibernation mode. I think they come out, bull markets here in 24.
Dan Ives mentioned 2.1 million deliveries in 2024, and that got me thinking. That's only 300,000 more vehicles than last year in 2023. And what that will allow Tesla to do is actually focus on optimizing for margins next year. I don't think we're going to see margins deplete that much more because now you have Berlin and Austin being ramped. So now you have Fremont, Berlin, Shanghai, Austin, all running near full capacity, and I think we're going to see some incredible margins this year. And as far as it goes about being 1995 in the AI revolution, I think Tesla's ChatGPT moment has yet to be seized. We're seeing Nvidia see incredible stock gains on the back of hardware, but think about all those companies investing in that Nvidia hardware. They're not just buying it to burn the money out of their pockets, they're making it as an investment. And one of Nvidia's biggest customers is Tesla, and they're putting those chips towards developing real-world artificial general intelligence, and it's going to pay huge dividends via full self-driving and Tesla Optimus. So that's what we're excited about on this channel. So make sure you're subscribed, and I hope you guys enjoyed today's video, and I'll talk to you guys soon.